Good morning, welcome to the market view for Thursday, the 5th of June 2014. Starting off with the 30-minute chart, we can see yesterday the market exploded to the upside, and that was around 10 a.m. and then continued for the next couple of hours, and then before you know it, we're back to a 50% retracement of the day's activity. No doubt the G7 having an impact during yesterday's trading. It was the same for the Dow. 1 minute it was up, then it was down, and it took a moment or two before the market could decide on its direction, which obviously at the moment is predominantly to the upside. However, coming back to the pound, we've got this situation which if we look at the daily chart, you will see exactly what I'm talking about. The market is stuck in this range. The range is around 60 pips at most, I would have thought. We go from the low to the high. We've got 97 there, which seems slightly odd because each of these lines is 50. So 97 range from top to bottom. Yesterday the market moving lower and then coming back and finding support, trading all the way down to the 76% of 166.96, where the market then found support and moved back to the upside with that explosive move. So the market stuck in this sideways range. It's certainly defined, that's for sure, of a range of around 90 pips there. And there's not a lot we can do until it starts to move and breaks out itself. At the moment, we can only just mark up a few areas of where the market is likely to move to. So we'll just put some in for the downside. If it comes back again, we've got these two figures here, 16726, 16713. On the upside, we've still got these other figures in place, but we could expect some upside problems at 167.76 as well, should the market move up. Of course, that will be the first, and then you've got the highs in these two bars as well. So exceptionally quiet. Nothing we can do. Like I say, we've just got to sit this one out. The market is just trading in this very narrow range, trading sort of the 167 80-ish level all the way down to 167. 167 is more or less the low for this market. So major support at 167, so keep that in mind as well. In the news today, we've got this G7 meeting still going on, and bits and pieces keep coming out about this, which moves the market sporadically. We've also got the asset purchase facility, the official bank rate at midday as well, and the MPC statement at midday. Minimum bid rate for Europe as well. You want to keep an eye on that one today as well. There's a chance here that this could be the rates could be dropped because growth has fallen off in the Eurozone, so watch out for this one at midday. Well, that's 12:45 for that. We've got midday with the UK, which you don't want to be in. And then we've got the ECB press conference as well at 1:30, so watch that one as well, because Draghi is going to be speaking and no doubt trying to talk the market up as well at that time. 6:30 is the next thing, but again, this G7 meeting is a real pain in the rear at the moment because we just don't know when the announcements are coming out. So I suppose we could expect more of the same thing today, except to say that around lunchtime, once the interest rate decisions come out, and in particular the European one, then watch out just in case they drop the interest rates at the 12:45 meeting there. The announcement, actually, not a meeting. So 12:45, watch this one, just in case they do drop interest rates. Well, that's it for me this morning. We could have a quick look at the implied volatility. So let's just do that before we conclude. Right, let's have a look at the Dow implied. Let's go down to the volatility chart. We don't have any new records in the Dow, but it's interesting to see that the implied is starting to actually move up. And yesterday, like I say, the Dow was it sold off quite sharply on the open below 16,700, and then the market was brought back very quickly, which is a classic distribution phase where the market keeps being brought back above a significant psychological level for the professionals to sell off more stocks. There's no doubts about it. We do have a correction in the pipeline. As to the date and time, that I can't tell you, but we're certainly in that territory at the moment where we could see a decent pullback in the stock market. It just depends what the catalyst is going to be in order to move the market lower. Well, that's it for me this morning. Like I say, keep an eye out on the European news out at 12:45. That could be a make or break for shaking the markets up today. All things being equal, I will be back tomorrow. As of a good day, and as ever, thank you for your support and also for watching.